All right, welcome everybody. Sunday, April 12th, 2026. This is Liquid Sundays, SPX market overview. We're going to take a look at the weekly chart and the daily chart of the SPX. We'll try to figure out where we might be heading, where we were, and let's see where we are right now. So here's where our weekly candle closed. Um, if you take a look from the weekly chart here, I'll just use my price range indicator here. So we had a drawdown of about 9.8% on the SPX. This is the cash session here. So weekly charts here. We got a change of character. It looked like it was going to be something like this, but then the market showed some resilience. We had some geopolitical easing tensions on a potential ceasefire. Market rallied. So this is no longer the base case. So it was looking like it was going to be, a squeeze down. But if you look here, change of character, something I look for in recovery is, if you lose a critical support level, once you recover that level quickly, the thesis is kind of out the window for, potential similar pattern here. And you can see on the histogram here. So we lost change of character last March, and then obviously we had the flush down Liberation Day. You can see here the squeeze on the histogram. Um, it fired and then it turns yellow, and that means that the downside momentum is fading. So this quick recovery here, these lows, and that downside momentum fading. Now, if you look from a recovery standpoint, a drawdown of 9.8%, 9.81% technically, and then if you just want to look at what the recovery is here, you've got sharp recovery of 8.39% off of the lows here. So that's substantial. And this is the SPX cash session. So, 529 points in 2 days. That's pretty resilient. All right. So, where are we now? So, we ended last week, strong close. We've got some new headlines now. The deal's going to fall through as far as who knows what's going to happen. We really don't know. But on the potential news that the deal is not going to happen. We're talking about a blockade now in the Strait of Hormuz. So we'll see what happens. So markets currently on the futures, they gap down here. So here's the US 500. Okay. Um, let's take a look at, the gap here. So we closed Friday 68.25 in the after hour session and opened up here at 67.43. So basically a 100-point drawdown from Friday's high, which by today's standards doesn't seem like a whole lot, to be quite honest with you. We get these massive gap downs, you know, on Mondays quite often now, and I wouldn't be surprised if this gets recovered. But let's take a look at the SPX um, cash session chart, and we'll just take a fib and we'll see where are we at right now and what we can kind of look for. So I'll just take my, roughly my high to low here. I was looking for, on the upside here, I was looking at around 60, 68.80 to 69.50, which is about, the high of this candle here for a potential, um, resistance level. You can see here these swing highs, the order block here on this weekly chart here is what this little red shaded area is here. So I did post in my alpha alerts that, um, any pullback, we could get up to a 50% retracement of this move off the lows and potentially could hold, um, if we reverse this here. I'll just give you just um, a quick rundown. Basically 50% of this move here gets us back to like 65.83. But if we flip this around here and we look at what the percentage is of the retrace on the way down here, 65.84, 65.80, I'm sorry, 65.86, 65.85-ish area here is 50%. But the first level that I'm going to look for is this 67.26 to hold, and obviously this 66.48. So I don't think that this is in any real danger of falling back too much, getting too much more of a drawdown, unless we fail to close above, this 38.2, or this really primarily this 50% mark, because this could potentially just be a, retrace of this aggressive bounce that we're having here. And if we were to reclaim, if we basically bounce down here and hold this level here, you can see that we're clearly still going to be above what this change of character here. So for market structure, that would put us more in a range, versus a downtrend. Now, obviously, if we close back down below these levels here, 65.86, 6,500, that puts us in a potential continuation for more downside. But we went from primarily, from last October, pretty sideways, to be quite honest with you, up until this point here. So just take a look at where are we in retrospect to last October. Where did we close? We closed pretty close to that level on Friday. So now we're getting a little pullback from this aggressive bounce here, which from a technical standpoint makes a lot of sense. With that being said, obviously there's a lot of stuff going on headlines wise in the news, so I don't really want to focus on the headlines. It's important to know what's going on, but the chart will tell us what we need to do as far as positioning, on a daily basis. So here's the weekly chart. If I'm going to take a little, if I'm going to take a look a little bit closer, I'll take a look at the daily chart. And so right now we're at 67.48 in the futures market. In the futures market, see US 500 is right here. So um, let's just look at the daily chart here on the cash session, because we do have a gap below us. But let's see, where do we need to hold on this daily chart here? So if this is our drawdown here, and 50% of this mark here. So this looks like, we could potentially fill gap here. I don't know if that's going to happen. It could happen. But let's just look at where that kind of leaves us as far as what the levels we were looking at. Okay, so just think about this, from a daily perspective. So gap down, we're trading right about 50% off of that mark right there, right? From the gap. So if you think from Tuesday's gap up to Friday's high, Wednesday's gap up to Friday's high here, we pretty much right now have retraced, 50% of that gap. So, um, heading into tomorrow, obviously, I don't like to ever get ahead of myself here, but heading into tomorrow, if we look at US 500 here, so here I'll bring up the daily chart here. This has obviously all of the um, overnight data. So let's bring this up here. Fib retrace. Here's that. Here's the gap. Here's the gap. This is obviously the overnight gap, right? So that gap up, that gap up from Tuesday to Wednesday, we can see what happened overnight here. Big gap up, and then obviously right now we're trading back, right into that area here. So that gap is acting kind of as a as support right now. Um, so let's take our rectangle tool here, and then you can basically look at this as, a fair value, a daily fair value gap up. Okay. Now there's a little gap down here. We'll see if that gets filled before morning or if not. But that's something maybe we can target later in the week. But here's the gap. So very short term, kind of intermediate to short term way to look at this is we can take this gap here, this fair value gap, and we can likely expect that this, once we trade into these back into these fair value gaps, there's a good chance, that we'll at least visit the 50% mark here. So, should the top of this gap act as resistance, 60, let's just say where we're at right now, 67.55. I don't know if it will yet, but just playing devil's advocate here. If this acts as resistance here, likely we'll retrace at least to this 66.96 level. We can see a lot of time before we get to the New York Open, obviously. So, but as far as levels that I'm going to be looking for on Monday's Open, are we going to be trading above or below this level here? This basically range right here, and are we going to try to fill this gap? Is always the question when you gap down on a Monday. We could potentially get retrace down and then bounce back up. A lot of times on OPEX weeks, options expiration, you do get a small doji. You A lot of times you close the week very very close to where the week opened, because that's what market makers are trying to accomplish. So anyway, we can trade it up, down, sideways. Obviously, I'll have a plan, a daily plan per usual, and we'll just trade that accordingly. So, um, as far as maybe some other key notes that I'd like to talk about this evening, there's some stuff from Stock Traders Almanac, and let me see if I can. I'll just post it. I'll post it here in the chart here, so you can read along with me. Let's see here. Much of the information that I'm following on a daily and weekly basis, has a lot of. I like to look at seasonal trends and what type of sectors are going to be outperforming or lagging, so that we can get a feel for what direction to kind of go in, right? So if you see, for example, um, you know, telecommunications outperforming this week, then there's a good chance that there's some more defensive positioning, and that usually tells us that we're going to get some drawdown in tech. So anyway, here's some key notes that let me make this a little bit smaller here. So maybe here we go. All right, so this is pretty much just some direct notes out of Stock Traders Almanac, kind of put into some concise, bullet points here. So, welcome to the sweet spot of the 4-year cycle. Q4 midterm year to Q2 pre-election year highlights the intersection of seasonal patterns in quadrennial presidential election cycle as a strong market period. Fourth quarter market magic details a historically strong rally from the midterm year low to the pre-election year high, with a noted 50% gain in the Dow. So weak spot Q2 to Q3 of midterm year, historically the weakest 2-quarter period in the entire 4-year cycle, with average losses of -2% in the Dow Jones Industrial, -2.5% in the S&P, and -6.6% in the Nasdaq Composite. Sweet spot performance from midterm year Q4 to pre-election year Q2 over about 3 quarters. The Dow Jones plus 20%, S&P plus, Dow Jones plus 19.3%, S&P plus 20.2%, and Nasdaq plus 29.4%. Longer term gains from midterm low to pre-election high. Dow Jones Industrial plus 46.3% since 1914, Nasdaq plus 66.6% since 1974. Midterm election years nicknamed bottom picker's paradise. Weakness in Q2, Q3 often creates buying opportunities, setting up subsequent rally into the sweet spot and new highs. So, basically, if the market falters in Q2 or early Q3 of 2026, this is a midterm year. Watch for potential late Q3 or early Q4 low. Then prepare for a rally off that low into the sweet spot. Does that make sense? So, we're basically looking at, cycles, and there's, this 4-year obviously presidential cycle and a sweet spot. So, I ideally, if we get some weakness into the, end of this year, might set up a really nice buying opportunity into pre-election and then election. I mean, you can see those numbers that I posted there. Long-term gains plus 46% since 1914. That's pretty significant on the Dow Jones, and plus 66% on the Nasdaq. So if we do get a significant drawdown, might create some really nice opportunities long term in the next over the next couple years. So anyway, all right. Some other charts that we can look at. The VIX. This was pretty significant, and I'll tell you why. Take a look at, if we're looking at the weekly chart on the VIX here, obviously we were in some cautionary red zone material up here in the 35s. But look at this drawdown here. We basically, that's not the right one. We basically, minus 46% since Monday, March. This was March 9th, right? Yeah, here's February. So a big haircut on the VIX since, since the beginning of March. So with that being said, some bouncing here makes sense on the VIX. So, we're seeing, I know that, obviously everything's quote unquote, news driven, but realistically, when you look at kind of the technical patterns of the VIX and stuff like that, it's kind of telling us, that we basically are due for a little bit more of a pullback, just because the VIX is likely gonna bounce back up into the maybe this 20 range here. Like let's just say let's say this recovers a half of this move here. You can just look at something like I don't know, 20, as high as, 20, 27, 26. So if we get up back up that high, obviously the market will give us that pullback that we're talking about for sure. So something to be mindful of. Another leading indicator that we can kind of keep an eye on is always going to be Bitcoin. We did have, if you look at the weekly chart here, a little bit of a strength off these lows here. Weekly chart, it doesn't look like there's anything too significant to get excited as far as upside here. It's almost like, okay, we're retesting this line here, so maybe a little bit higher, push up into this area here. I had 75, 70, 75, 78 on my bingo card, and then maybe a little bit more drawdown on Bitcoin. But Bitcoin is not giving us too much to worry about yet. As far as, you know, if Bitcoin, Bitcoin loses this 59 level here that we tested back in February, this will be a big risk off indicator. And I think the market will fall lower than. I don't think that let's just put it this way: if Bitcoin loses, support here, then the lows for 2026 are likely not in. It was kind of my thinking. 62 to 6,300 on the SPX was a great spot for near term lows. We kind of bounced off that, and I'm thinking, oh, maybe that'll be our lows as far as intermediate term. But I think keeping an eye on Bitcoin is warranted, as we're pretty much kind of sideways here. So as far as risk on, risk off appetite, we're we did get this drawdown here from the beginning of the year, but very sideways. So consolidating, likely for a bigger move is my guess. So we can keep an eye on, obviously, Bitcoin. We can keep an eye on crude oil futures, and you know crude oil futures may not quite have peaked yet. Um, it looked like we had this obviously awesome um, pullback here off of the quote unquote potential ceasefire, but we've quickly recovered those those lows there. I mean, we bounced. Again, what what I look for in recovery of equities, commodities is, if we lose support and we quickly regain that support, then, well, I mean, there's a good chance that we're going to push back up and potentially at least test, um, 50%. We've already we're already there right now. So there's a gap right here. This crude oil futures can get back up to the 110 area here, maybe before we'll see if that acts as resistance again. So that's a level I'm going to look for on crude. And you can trade XLE sympathy play off of crude, or you can also trade. There's another West Texas instrument, West Texas Intermediate Crude Oil Cash. Another way to play oil here. So there's a little gap here on this up to 100 here. Mm, We hit a lot of our upside targets on a lot of the oil stuff that we were looking at earlier. So um, yeah, we'll keep an eye on oil, keep an eye on the VIX and Bitcoin. So with that being said, I will end this quick overview here, and I can take some questions and look at some charts if anyone wants me to. Feel free to ping me in the chat, and I can look at some stuff for you right now while we got some time. Thanks for hanging out.